As of 11:30 a.m. EST on Monday, May 11, 2026, Lucid Group Inc. is trading at $6.22, showing a slight downward movement of 1.9% since the opening bell. While the broader indices are showing some resilience, Lucid is feeling the weight of its own internal shifting tides. If you look at the surface, you see a luxury car maker struggling with cash burn, but the reality is starting to look much more like a high-stakes technology play backed by sovereign wealth and a massive pivot into the service economy. Most people watching Lucid stock right now are focused on the widened loss of $1.03 billion reported just a few days ago, assuming the company is simply bleeding out. But the angle that hasn't fully registered with the masses is the absolute scale of the expanded partnership with Uber. We are talking about a commitment of at least 35,000 Gravity vehicles. This isn't just selling cars to rich people in the suburbs anymore. It is the beginning of a massive infrastructure for a future Robotaxi fleet. Expectations for Lucid have always been sky high because of their engineering. The narrative has been that the Air sedan is the king of range, and that technical superiority would naturally lead to market dominance. The reality, however, has been a brutal lesson in manufacturing and scaling. Investors are currently trapped in a cycle of worry because the company suspended its 2026 production guidance. That is a heavy blow for anyone looking for investment help or trying to justify holding a large position in an individual brokerage. The common ground most traders share is the belief that Lucid is just a more expensive, less efficient version of Tesla stock. But I want to challenge that by looking at the institutional activity. We recently saw a $1.05 billion public offering and fresh cash from the PIF. While dilution is a legitimate fear, the reality is that Lucid has a financial backstop that most other EV startups could only dream of. When you are looking at online investing sites or checking your Fidelity mobile app, you have to ask if you are betting on the cars or the battery tech. The recent intraday movement reflects a market that is still digesting the leadership change. With Silvio Napoli taking the reins, there is a distinct expectation of a reset. Usually when a company swaps CEOs during a period of massive losses, it is a signal that the old way of doing things, focusing purely on the luxury aesthetic, is being replaced by a focus on operational execution. Trading volumes have spiked, and we are seeing a lot of action on the Robinhood app and Interactive Brokers platform, specifically in the options chain. There is a massive tug of war happening between those who see the $5 price target for Morgan Stanley as the inevitable floor, and those who see Citigroup's $17 target as the long-term reality. The daily swings are being driven by sector momentum, or lack thereof, as the entire EV space faces a cooling of consumer demand. Yet Lucid's tech remains the outlier. Their powertrain is still being licensed out to brands like Aston Martin, which creates a high-margin revenue stream that traditional analysis often overlooks. Looking at the institutional side, the Public Investment Fund of Saudi Arabia isn't just a passive observer. Their IR third investment company is essentially underwriting the survival of this firm. For someone doing self-investing or managed through Schwab Intelligent Portfolios, this presents a unique risk profile. You are essentially investing alongside a sovereign nation that views Lucid as a key pillar of their non-oil future. This creates a safety net, but it also means the stock doesn't always move on pure market fundamentals. The volatility we see today is part of that friction. Macroeconomic pressures, particularly the higher for longer interest rate environment, make it incredibly expensive for a company to lose $1 billion a quarter. Every time the Fed speaks, Lucid stock reacts because their path to profitability is built on the availability of cheap capital and a consumer base that can afford a six-figure car or a high-end SUV like the Gravity. Let's talk about the business for a second. Lucid Group Inc. is headquartered in Newark, California, and they have positioned themselves as the ultimate high-end alternative in the electric space. They started with the Air sedan, which effectively set the record for the EPA estimated range at over 500 miles. Now the focus has shifted heavily to the Gravity SUV and a future midsize platform meant to compete directly with more affordable models. Their business model is vertically integrated, meaning they design almost everything in-house, from the motor to the software. This is why their technology is so coveted. However, manufacturing is where the expectation versus reality gap is the widest. It is one thing to design the best motor in the world. It is another to build 100,000 cars a year without quality issues. The Gravity stop sale and the current investigations into business practices are the primary reasons why the stock is struggling to break out of its current range. These aren't just speed bumps. They are fundamental questions about whether this team can actually run a global car company. The sentiment on platforms like SoFi Invest and among those using Robinhood stock trading has turned cautious. The buy-the-dip mentality that used to surround Lucid has been replaced by a show-me-the-deliveries attitude. This is a healthy evolution for the market, even if it hurts the stock price in the short term. We are seeing a lot of retail traders moving their funds into Fidelity mutual funds or safer Fidelity ETFs to avoid this kind of single-stock risk. But for those who stay, the catalyst is the Robotaxi narrative. If Lucid can successfully integrate their tech into an autonomous fleet with Uber, the valuation model changes from a car company to a platform company. That is the reality that could eventually exceed the current dismal expectations.
The dilution from the recent $1.05 billion raise was painful, but it bought the company time to solve its production bottlenecks. In the world of intelligent portfolio management, timing this entry is the hardest part because you are fighting against a negative gross margin that won't turn positive until the scale increases significantly. Comment below how many shares of Lucid Group Inc. you currently hold and what your average cost basis is. I'm curious to see if the community is still bullish on the tech or if the production delays have finally broken your thesis. Do you think the Saudi PIF will continue to bankroll these losses indefinitely, or is there a limit to their patience? Looking at the future outlook, we have several scenarios on the table. The optimistic scenario involves a smooth rollout of the Gravity SUV and a clearing of the current regulatory investigations, leading to a massive short squeeze. The short interest on LCID has historically been high, and any bit of genuinely good news on the manufacturing front could send the stock toward that $10 mark fairly quickly. The pessimistic scenario is a continuation of the cash burn and another round of dilution by late 2026, which would likely keep the stock pinned near its all-time lows. The reality likely lies somewhere in the middle. We are looking at a period of consolidation where the new leadership has to prove they can cut costs without killing the innovation that makes Lucid special. The expectation was that luxury EVs would take over the world by now. The reality is that the transition is slow, messy, and incredibly expensive. As we wrap up this look at Lucid, the central insight is that this is no longer just a car company. It is a technology laboratory for the Saudi Arabian government and a potential backbone for the future of autonomous ride-sharing. The contrast between the engineering excellence of the Lucid Air and the financial struggles of the corporate entity is as sharp as ever. While the live price of $6.22 might look like a bargain compared to the highs of the SPAC era, it reflects a market that is demanding proof of life. Investors using everything from Interactive Brokers' fees-conscious accounts to Fidelity Wealth Management are watching for that one quarter where production meets guidance. Until then, Lucid remains a high-tension bet on a future that is taking longer to arrive than anyone expected. The authority of the brand rests on its hardware, but its survival depends on its ability to stop being a startup and start being a manufacturer. The current intraday movement of Lucid stock is a microcosm of the entire sector's struggle. It is a battle between the visionary expectations of the future and the cold, hard reality of the balance sheet. Whether you are trading on the Robinhood app or holding for the long term in a SoFi active investing account, the message is clear. The technology is winning, but the business is still fighting for its life. The gap between these two things is where the opportunity and the extreme risk is currently hiding. In a world of online investing where everyone is looking for the next big thing, Lucid is a reminder that even the best tech needs a viable path to profit. We will be watching the next delivery report very closely, as that will be the moment of truth for the new CEO and the entire Robotaxi pivot. For now, the stock is stuck in a holding pattern, waiting for the reality of production to finally catch up to the expectation of the technology. Don't forget to check your positions on your Fidelity trading platform and stay updated on the latest filings, because in a stock like this, things can change in a single afternoon trading session. Lucid's story is far from over, but the chapters are getting more expensive to write by the day. Maintaining a balanced view between the engineering brilliance and the fiscal reality is the only way to navigate this ticker without losing your mind in the volatility. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.